Wednesday, February 10th, 2021, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at why silver ETFs, not just SLV, are like a game of musical chairs, and we're going to look at a great article by Ronan Manly of BullionStar. I went through the article and I'm going to give you a general idea of what he says. I highly recommend you read it. There's a lot of data and information, but it's worth reading the article. I'm going to put a link to the article in the description below of the video. So before I do that, let's quickly look at where the markets are this morning. It's just gone past 8 a.m. London. Yesterday, you probably noticed during the day, we saw that the silver price dropped out of bed, just dumped. Why was that? Well, because the bullion banks, the commercials, are desperate to cover their short positions because they know that we're running out, especially in London. The LBMA market is running out of available silver, and that's what we're going to talk about, of course. When we look at Ronan Manley's article. But I noticed that, yeah, we dropped to around 27.05 and it just rebounded really quickly. Yes, of course, it didn't go back up to the old highs, but it's just showing that it's getting harder and harder for them to get that price lower. And why is that? Well, because there are people who have access to COMEX, and what they're doing, they're buying the front month and they're standing for delivery. So they can get the physical and sell it for a premium. So unless they cover their shorts, they're going to become shorter and shorter. And by short, I mean they're going to have more selling positions. That's what a short is. When you, in the futures market, you've got two positions. A long, that's when you buy the contract. And the short, it's when you sell the contract. And the only way to close a futures position is to do the opposite. So if you're short, you have to cover that position by buying a contract, or you have to stand and deliver the physical. So let's see where we are this morning. Nevertheless, we've got spot gold at 1843. That's up just under $5. The high's been 1847.30 and the low 1833.80. I spoke about yesterday how 1875 is a key resistance. That's because there's a double top there, but it looks like 1850 they're gonna try to hold that line as well, the bullion banks and the people who control the paper price. Silver is up only 2 cents right now. So at 27.28, it's been as high as 27.48 and as low as 27.15. And yes, the fixing for silver is around midday. I think, I'm not sure, midday or 12:30 London. And you see, London is very important for the silver market. I know there's silver elsewhere, but the really big wholesale market, LBMA, is in London. There is the old saying, of course, that the Trinity that runs the world. The City of London does the finances. The Vatican is the spiritual manager. And Washington, D.C. is the military. So it's not surprising that the silver market is run out of London. So we've got Dow futures up 72. NASDAQ 100 future up 69. And S&P trading up to that 4,000 level. Now we're at 39.24, up 12. What about the currencies? Yeah, we saw the dollar drop about 0.5% yesterday. I saw the euro and the pound went up quite strongly, like 0.5%, which is a big move for the foreign exchange. Yes, gold and silver did lag, but I don't think it will last that long. Right now, the pound is up slightly at 138.28. The euro is at 121.27, unchanged. Dollars unchanged versus the Japanese yen, and dollars at 642.30, up slightly versus the yuan. High-grade copper remains firm, 376, up 1%. WTI crude is down slightly at 58.14. Just check the 10-year yield. 10-year yield is up slightly from yesterday. I think we were on 112. It's crept back up. It's at 116. The 30-year bond yield is at 195. So in the bond markets, a 10-year is called a note, but a 30-year is called a bond. It's the long bond. And below 2 years, everything's called a bill. So from 2 to 10, they're notes. From below 2 years, they're bills. And above 10 years, they're bonds. Just a little bit of information about the U.S. Treasury bond market. So now to the musical chairs. Of course, most of you probably know the game of musical chairs. I enjoyed playing that when I was younger. It was always fun. You're dancing around the chairs, the music stops, and there's not enough chairs, right? And at the end, there's just one person left with one chair. But yes, this article came out on February 8th by Ronan Manly. So who's Ronan Manly? It says here, Ronan Manly is a precious metals analyst with BullionStar, whose blogs often cover current themes, including what's going on in the London gold market and the gold activities of central banks. I think he's based out of Singapore, Ronan Manly. Houston, we have a problem. 85% of silver in London already held by ETFs. So when we think about silver ETF, we think of only SLV, but he's done a great job here of showing us how many different ETFs there are. Of course, SLV is the biggest, as you can see there. SLV supposedly has title to 20,364.7 tons. And as you can see, most of these ETFs, the custodian is either JP Morgan or some other company, but most of it is JP Morgan. You can see here that there's another one, PHAG or PHPP, Wisdom Tree ETF. That's HSBC and Malka. They've got just over 3,000 tons and so on, as you can see. And at the bottom, they've got a few other clients. They're not ETFs like Bullion Vault and Gold Money. As you can see, Loomis holds their silver, and Bullion Vault has got just under 500 tons. Gold Money just under, just above 200 tons. Basically 28,698 kilos or 922.647 million ounces of silver. So he's gone through the whole set of data. He's done his analysis, and what he's found is that out of the 1.08 billion ounces of silver that are held in vaults throughout London, and it's not just the city of London, it's near airports and other places. So that's 33,609 tons. He says that the ETFs control 83.3% of those, which is 28,007 tons, as you can see there. The other 1.7% is from Gold Money and Bullion Vault. And he goes through all the different ETFs. I highly recommend you read it. And I've done it. I've read through it. One of the interesting points he makes is that, for example, for SLV, all of a sudden, most of their silver is held in different vaults. Up until last year, it was only held in one or two. So there's a lot of things that are going on that don't seem to, they seem to raise red flags. So this is his conclusion here. I'm going to go to this conclusion, and then I'm going to look at some numbers to show you how very little silver there is left, available silver there is left in London. Of course, there are other stocks of silver, like, individuals have silver. They can sell the silver, but I'm just going to focus on the major wholesale market, of course. It says, if the above 14 ETFs, yes, 14, see continued investment inflows. So even people buying ETFs, even though you can't take delivery, the people who manage these ETFs, they are required to add physical to their holdings, whether they're really adding different physicals, whether they're like hypothecating, which means, how can I say, it's really hard to explain because it's really hard to understand how bankers, well, it's not really. Basically, it's possible that they're saying that bar 102 is owned by different people, right? So different people owning the same silver. So it's not very clear, but it's very hard to take a physical delivery. You have to be a very big client if you look at all these ETFs. And even then, it's probably not possible. They probably discourage it. They will all have to compete for the available silver in London, which is not already held within these ETFs. And that available silver is at a historic low, some 3,000 tons or so. A few more days of inflows like the ones seen over 29th of January to the 2nd of February would be a major emergency for these ETF providers, particularly the iShares SLV, because there's just not that much physical silver left in the vaults of JP Morgan, Brinks, Malka Amit, Loomis, and HSBC, which is not already reported as being in these ETFs. And let's not forget all the unallocated silver positions. So what is unallocated silver? Well, it's silver that is not delivered, but you claim ownership to it, like the big wholesale investors or the very wealthy. A lot of times they buy unallocated silver, which are claims against the bullion banks for silver which they have not got. So there you go. Anyone with deep enough pockets could now cause a serious run on the remaining available silver stored in London that is not currently attributed to the above ETFs. So yes, he doesn't even look at how much unallocated silver is held by so-called hedge funds, family offices, because there's no public information, but there's public information for the ETFs. So I've done a little bit of number crunching here. Yes, it's a bit tricky. You have to convert things from metric tons to kilos to ounces to grams, but I've done it for you. So right now, according to Ronan Manly, we have 3 million kilograms of silver in London, or 3,000 tons. So let's say, for example, if 100,000 people wanted to buy the silver, the 3,000 tons, well, they would only be able to buy 30 kilograms. So 30 kilos, that's 964 ounces. So that's about, that's the 1,000 ounce bar, so to speak, a little bit below it. So for 100,000 people, there's only 1,000 ounce bar, so one COMEX bar, as they call it. But let's say 1 million people wanted to buy these 3,000 tons. Well, there would only be 96.45 ounces, so just 100 ounce bar. Let's round it up to make it simpler. And now I've taken the world population, because I think this silver movement is not just in the US, it's here in the UK, and it's spreading, in my opinion, throughout the world. So let's say world population 8 billion or so, maybe a bit less, but let's say 8 billion. 0.5% of the world population wanted to buy silver. You know, that's 40 million people. There would only be 2.4 ounces, so just about 2.5, 1 ounce silver eagles for half the world population. And then I've done a calculation for the United States. And I think the population of the States, I didn't look up on Google, I just know roughly it's around 330 million, I would say. So if 2% of the US population, which is 6.6 million people, wanted to buy silver, there'd only be 14.61 ounces in London, of course. Of course, there is more silver held privately all around the world, but I'm talking about the major silver center for the world. If you go through this article, you see that there is some SLV silver held in New York, but the majority of all these ETFs, the silver is held in London and mostly by JP Morgan, of course. So he did a survey on his Twitter account a few days ago, February 3rd. Just go through this before I finish off. It says, does the SLV silver ETF custodian JP Morgan have all the silver it claims to have? So I think there were only 331 votes. Nevertheless, the majority, over 50% said no. Only 5.7% said yes. 11.5% said yes, but includes least. JP Morgan manipulation, it says 24.2%. So that's why I think it's important that we hold the line, right? And keep buying as much as we can, even an ounce. As you can see here, it can make a big difference to the silver that's left, if there is any really, in London. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.